Welcome back to Entrepreneur Money Stories. Are you putting your business in jeopardy by mixing personal and business expenses? In this video, I'm going to show you why it's important to keep your business and personal finances separate and the dangers of not doing so. My name is Danielle Hayden, founder and CEO of Kickstart Accounting Inc. We have worked with thousands of business owners using bookkeeping as a vehicle to help us as business owners better manage our businesses and use our numbers to grow and thrive. I will never forget this client who came to us last fall. It was one of those mornings where it was a beautiful fall morning. After I dropped the kids off, I was just sitting here enjoying the colors of the leaves. It's just like crisp cup of coffee until I got on a client call. She was a brand new client. She was coming into onboarding. And this woman was so frantic and upset because she knew she had been commingling business and personal finances. She was so scared to be on the call with us. I will never forget her face and the shakiness in her voice because she was so afraid of what we would think, what the IRS would do, and how this would be handled. And so I'm here to tell you a few things. Our policy here at Kickstart Accounting Inc. is that there is no judgment. There's no judgment from myself. There's no judgment from my team. We are all here to be of service to you, the business owner. So no matter what your situation is or how dire you feel it is, I promise you, one, we have seen it before. And two, we are not judging you. We are here to support you. Next, even if you are commingling today, and I'm not going to say it's okay because I'm going to walk through all the reasons why it's not okay, but the IRS is not coming after you tomorrow. They are not going to put you in prison. We are going to work it out. We're going to figure out the best way to do your bookkeeping so that it's reflected correctly for the prior periods, and then it's corrected moving forward. So the worst thing that you can do is to continue to bury your head in the sand. The best thing you can do is to start taking action right now. So with this client that I was mentioning, by the end of the call, I mean, her shoulders were relaxed. She was breathing sigh of relief. She kept on going on and on about how much she appreciated the way that we were caring for her and helping her get organized. What's most important about that story is that when we filed her taxes that year, her bookkeeping was correct. So most importantly, the bookkeeping was accurate. And then she put in the right practices for moving forward. So she didn't continue to have that problem. In 2023, she kept everything separate and her bookkeeping is accurate and her taxes are going to be done correctly. So let's walk through today the reasons why we should not be commingling, what to do if you have commingled in the past, and then best practices moving forward. Now, let's start with a few examples because some people will say to me, Danielle, I'm an LLC. All of the money of my business is my money, and it's not. So as soon as you become a business, those funds are not actually yours. They are the property of your LLC. And until you've transferred that money into your business checking account or into your personal checking account, you should not be using those funds for personal expenses. So there's several examples of commingling. You might be withdrawing money from a business debit card and then using the money on personal expenses. You might be taking cash from the business for personal use. You might be using a company credit card to pay for personal dinner, meals, utilities, personal bills. You might be taking out a loan in the business name of the company and then using the money for personal expenses instead, or taking that money as an owner's draw. You might be paying for family vacations with business funds and then writing them off as business trips. Only having one bank account and then running all of your business and personal funds through one checking account. Another example of this might be depositing your business checks into your personal bank account, withdrawing money from your business account to pay for the personal expenses without documentation. So there are several examples. I think the most common one that we see with our clients is just having one checking account and paying all of the personal expenses with that business checking account, or doing the same thing with a credit card. So that is the most common example that we see. Why don't we want you to commingle? I think the most important piece is the legal protection of your entity. I don't want any of you to lose the liability protection that your company provides you. Commingling funds ends this protection in what lawyers call piercing the corporate veil. What this means is that once you've pierced the veil, creditors can take you to court and argue that your business and you are not separate and come from both your business and your personal belongings. So, not an attorney here, right? We are an accounting firm, but we've worked with enough clients and attorneys throughout the years. We've partnered with several attorneys to understand that this is so important. I want you to maintain the legal protection that your company provides. And by commingling this, you are piercing the corporate veil, and then creditors can take you to court and come after you for both your business and your personal belongings. When it is a pattern of commingling funds, this hurts the integrity of your entity. It hurts the integrity of your company. It exposes you to risk. And it's when you establish the pattern of bad business practices, such as commingling on a regular basis, the integrity of your business deteriorates, okay? I want all of you to run healthy, sustainable, profitable businesses. And this is one of the fundamental things that we can do. If you were to do nothing else this year, it would be to get your business and your personal finances 100% separate. All right, reason number 2 is your business's health. This is where our love of the game comes in. But, when you're commingling business and personal expenses, the tracking of expenses becomes harder. It becomes harder for us to do your bookkeeping. Now, it's not impossible, right? Like I said, if you've been commingling all year, don't put this off anymore. We can do your bookkeeping and help you separate what's business and what's personal, and just do the bookkeeping so that it is correctly classified, so that then you can have the best practices moving forward. But when your business and personal finances are mixed together, there's not really a clear way for you to see how your business is really doing. You're left with just an unclear and incomplete picture of your financial health and the business profitability, because all of your financial reports and statements are contaminated by your personal expenses. Because remember, guys, cash is the number one reason why businesses fail. So if you are struggling with cash flow in your business, you're not going to be able to properly identify and solve the issue if you are commingling those funds. Is it a personal spending problem or is it a business problem? We worked with a client last year who she actually didn't have a spending problem in the business. However, she needed to cover a lot of her personal expenses through her business because of the cash flow issues in her personal life. And so although we kept on reviewing her income statement, we looked over and over again for places to cut. There was no place for us to cut on the business side. In fact, the cuts on the business side were really actually keeping her business from growing and thriving. But what we found was that she never had cash in her business to reinvest back in the business and to grow the way she wanted it to grow, because all of those personal expenses that were coming through the business, we were classifying them correctly as personal expenses. So all she could feel was that she had no cash in the business. And she's going to end up with a tax bill at the end of the year, because all those personal expenses, those aren't actually a business expense. So she's going to have a profit at the end of the year. She's going to pay taxes at the end of the year. She feels like she doesn't have any cash because of all those personal expenses that are going through the business. And so by separating them, we can start to identify where is the spending problem and how to correct it. Now, here at Kickstart Accounting Inc., we do bookkeeping for both your business and your personal. So if that's something that you're like, I know my business is on point, I know where I'm spending money, but I don't know where I'm spending money personally, it might be a good time to have that analysis done of your personal bookkeeping so that you can manage your personal spending just the way you do your business spending. Have you heard yourself saying, I'm scared to invest money in my business because what if it doesn't come back? I don't know how much to pay myself, so I won't take a paycheck yet. I'm reinvesting in the business anyway. Or how about, I'm not going to spend any more money until I know exactly where my money is going. Well, let me tell you, you are not alone. In fact, we have heard all of these stories and more throughout the last 9 years at Kickstart Accounting Inc. And that is why we have created the Money Mindset Mastery Framework to finally unlock and overcome these stories, to finally feel confident in your financial decisions and pay yourself what you deserve. The first step to create a profitable and successful business is to first understand your money mindset. Find out your money mindset personality type by going to kickstartaccountinginc.com/quiz. I can't wait to hear what your money mindset type is. All right, next is claiming your tax deductions. Commingling your business and personal finances opens you up to an IRS audit. If you find that your personal income taxes are being audited and the auditor finds business expenses mixed in, it will likely trigger an audit of your business taxes as well. So personal expenses in your business, they're likely going to cause the auditor to dig much deeper than they otherwise would, right? So we're going to drag out the audit process and cause a lot of undue stress for you and your business. And ultimately, it could lead to disallowed deductions. By putting through personal expenses in your business, if you're later audited and those deductions are disallowed, you will be paying the taxes, penalty, and interest on those deductions that have been removed, on that business expense that has been removed. The IRS could consider you a hobby and not a business. So one of the ways that they determine if you have a serious business as opposed to a hobby that brings in some money is by looking at your bookkeeping to see if you track finances with a profit motive. Having your finances commingled could lead them to consider your income, your business, hobby income, which disqualifies you for deductions and could prevent you from claiming any losses against your business income in the future. So I do not want anyone to be considered a hobby. It's really important that we are tracking our finances for a profit motive. And the best way that we can do that is to remove our personal expenses. Now, I think it would be a good idea to pause here just to remind you what the IRS defines as a qualifying business expense. So the tax law requires business expenses to be ordinary or common and acceptable in your trade or business and necessary, helpful, and appropriate for your trade or business. So this is the IRS definition of a business expense. I know that there is some gray area about what can be considered a business expense or personal. If you need help, contact your money team, contact your CPA. At the end of the day, there is some gray area here. I've talked to you guys on the podcast before. I'm a little bit more risk adverse, so I don't want to pay more than what I owe in terms of taxes, but I also want to make sure that I am following the rules. So for me, I will really it is very, very clear on what's personal and what's business for me. And you can usually do a gut check. You can usually do a gut check on whether or not this is truly for business or for your personal use. And then lastly, I don't want to throw crime in here, but if you are part of a multi-member LLC, so you have a partner or you're a corporation, your fellow business owners, right, your other partners may consider the commingling funds as a form of theft. Now, if you're a multi-member LLC, if you have partners and who you are doing business with, but remember, if you have other partners within your business, one, how would you want them to treat the business credit card? In all fairness, would you want them to be taking that same personal expense? And we need to be careful about, if you are an S Corp, the amount of distributions and pay that you are taking, that it aligns with the structure of your agreements and the percent of ownership. So I'm not going to go down that rabbit hole. We can talk about partnerships additionally, but just know that this is even more important when you are operating with partners. So what to do if you have commingled funds? Like, where do we go from here? If you've had this issue in the past, how do we move forward? The first step is we need to comb through their transactions. So you're going to go through the entire year. If you're doing your own bookkeeping, DIYing it this year, I want you to export all of your transactions from the bank. In your bank, there's an option to export to an Excel or CSV file, where then you can go through every single transaction and you can identify which ones were personal and which ones are a business expense. Now, there's two options that once you have classified them for your bookkeeping. they can be considered a fringe benefit and entered through payroll. You can then pay the payroll taxes on those personal expenses, or you can consider them an owner's draw. Remember, S Corps, if you are not paying yourself a reasonable compensation, if you have not paid yourself a reasonable salary, it is really important that you're not taking owner's draws in your business until you've paid yourself a reasonable compensation. The IRS has changed in 2023. They are cracking down. They do not want to see S Corps taking draws unless they've paid themselves enough through payroll. They consider this avoiding payroll taxes. So if you have not paid yourself enough through salary, I would not recommend taking these personal expenses as draws. I would recommend putting them through payroll and paying the payroll taxes on them. If you have paid for business expenses with a personal checking account, this one's pretty straightforward. You can actually just reimburse yourself for the amount of the expense in the same manner that you would usually use to pay yourself. So a bank transfer, Zelle, a check, whatever you normally use to pay yourself an owner's draw, you would just reimburse yourself for that business expense. What's most important is the bookkeeping. So when you see that transaction from your business checking account into your personal checking account, that you're expensing it to the right account. Lastly, as a C Corp or an S Corp, you may have what's called an accountable reimbursement plan, which kind of resolves this commingling issue for corporations. It allows the owner to use your personal card for business expenses and still receive a business write-off for the expense. So talk to your CPA, your tax accountant about an accountable reimbursement plan for those expenses that you might be commingling. All right, so what are the best practices moving forward? First and foremost, make sure that you have a separate business and personal account and credit card. It's very simple. When you go to Target, Walmart, or wherever you're going, you have two cards and you literally separate your transaction. I mean, my kids know and understand very well at this point. We're 9 years into this business. And so I am that obnoxious person in Target that takes out two credit cards, and I have a little break in my grocery line of what I need to pay personally and what I need to pay with my business account. So make sure you have separate accounts. Your business account is used for business income and business expenses. When you are ready to pay yourself, you then take an owner's draw or salary, and that money is then deposited into your personal account. It's considered personal income, where then you will be able to pay all of your personal expenses, such as your mortgage, meals with your children, right? Like the true personal expenses. Only use your business accounts for business purchases and only use your personal account for personal ones. If you find yourself buying something for your business and you only have your personal card available, make sure you talk to your bookkeeper to properly record the expense. Vice versa. If you find yourself at the store, I've done this a million times, and I usually only have my business card and not my personal card. I am actually notorious for losing my credit cards. I am surprised that Chase Bank hasn't fired me saying, we have wasted too much money on sending you cards. But, there has been times where I've bought something on my business card and I mark those expenses as personal owner's draws. Because I pay myself a reasonable salary, I don't have to then put it through my payroll. However, if I was not paying myself a reasonable salary, I would then put those personal expenses through payroll because I would not be able to take any owner's draws. Guys, it's really simple here, right? This one isn't very difficult. We want to use our business account for business expenses and our personal account for personal expenses. I want you to be able to understand health of your business. And the best way to do that is to keep this separate from day one. All right. And if you commingled all year this year, I forgive you. It's okay. No shame. We're going to start fresh next year and we're going to start separating moving forward. If you need help, I want you to go to kickstartaccountinginc.com. You can book a call. I would love to talk to you. My team and I, we're waiting to be a resource for you. So if you need help, come book a call. We would love to help you through this. So even if you feel like it's a total mess and you're never going to be able to get organized, I promise you, we have seen it all and we can help you get organized. I know we can see you through this. And if you've had any of those expenses this year, the business and personal, on a regular basis, I believe it's like quarterly, we send out our clients an Excel document of all of the owner's draws or personal expenses that we've seen come through the business. Please, clients, respond to our email. We are here and we are trying to help you. So on a quarterly basis, we will continue to send you your personal expenses so that you can review them and tell us if there was truly a business purpose for them or not. If you answer our email before tax season, we can get back to you in a timely manner. We can make sure everything is reclassified correctly for you so you can use your numbers to manage your business. If you do not have bookkeeping in your business, once again, bookkeeping is the vehicle for everything else. Bookkeeping is the foundation in which then you'll be able to use your bookkeeping for accurate taxes, accurate financial planning, accurate wealth building, and the best business decisions that you can make for you in your business. So again, go to kickstartaccountinginc.com and book a call. Don't forget to hit like and subscribe. We have so many amazing episodes coming your way. I do not want you to miss a thing. If you have any episodes that you would like to hear more about, you can send us a DM on Instagram at Kickstart Accounting.